what are your stepped interest rates paid out to your investors in the SFI fund?
Okay, so in both funds, MIXIF and SFI fund, they're practically the same. They're identical the way we have them structured. The only difference is MIXIF fund was set up since 2009, July 2009 when we set it up as Reg D 506B. It was set up just for my database of students and investors that knew me, that wanted to invest with me. In 2015, when Obama, the Jobs Act, created an opportunity for fund managers to publicly solicit, not just to their friends and family and people that knew them, to publicly tell the world, hey, I have an opportunity for you, want to invest with me? But take accredited investors only. That means those with a net worth of $1 million. That's when I duplicated the MIXIF and created an SFI fund, which is the exact same private placement memorandum, but it allows me to publicly solicit and bring the money. And to answer your question, the stepped structure is from 25,000 to 249,000, because people can invest in one share and then fractional shares, like get a share and a half, 25 and 12,500, okay? So 25 to 249,000 will pay 6%, and from 250,000 and higher will pay 8%. We do the payouts on February 28th, August 31st. We never miss the payment, and it's we manage our risk, we manage our exposure. Investors get cashed out always less than 12 months. I have never not cashed out any investor less than 12 months, whether partial or in full, because it's all personal relationships. I know the people, sometimes they say, can you cash me out in like 10 months? Can you not cash me out to the last minute? Okay, we work it out. I don't like to cash out people less than 90 days to 4 months, because then the SEC can always say, Cherif, you're behaving like a bank now, you're paying higher than any CD in the country. Why don't you get a bank license? I don't want to get a bank license. It's just a lot of compliance issues. I have enough compliance with the SEC to deal with, compliance with the tax incentives in Puerto Rico, compliance with, so much compliance. I got compliance coming out of my ears. I don't know if you noticed, but anyway, so I don't need to be a bank. And frankly, what's coming next is most likely, probably around the corner here in a few months, we will no longer take 250,000 investors and higher. I have no interest in getting more and more and more investors. I don't want to even pay 8%. That's how I lasted 13, almost now 14 years in the market without a problem, performing, because we're able to deliver and I can sleep at night. And if I don't sleep at night, I'll return all the money. This is along what I already do. We bring investors money and everybody's happy. They want to cash out, here's your money, thank you. You want to come back in? Fine, that's wonderful. I have no issues with that. The reason I say I may just stick with 25 to 249, because these people get the 6%, they're happy, they park their money for a year until something else they have to do or whatever, and we're able to work with them. Remember that construction loans cost me a little bit more now, acquisition loans cost a little bit more, credit lines cost a little bit more, and I constantly, my number one job is to mitigate the risk, manage the liability, manage the exposure, and that has always been my focus. The minute I get greedy, I step back and I say, oh, I am losing my touch here. I need to, there is no reason to run. Keep walking, keep getting to the, and when you hold some buildings, we do the mix of the diversification. When you hold some and buy and fix and sell others, when you hold some, the game comes to you. You don't have to rush for it. And we have that good balance now.